What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 10th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's update, we've really got two key things to focus in on. We not only have to take a look at cryptocurrency markets, as we've seen a really solid pop on Bitcoin over the last 24 hours, but we've got to spend a decent amount of time as well talking about how the Federal Reserve has decided to reverse its reduction of its balance sheet and re-add assets over the next coming months. Now, the Fed will deny it, but this is clearly quantitative easing, and I'm going to explain why it is and how it applies positive pressure for equities and how it might change how we have to trade equity markets. Outside of that as well, a key thing to note is that there is going to be a sponsored review at the end of the video for Tayel, previously known as Wabi. I know many of you out there were fans of the project, so we're going to recap and revisit the project after 2 years here on the channel and see how far they've come as a blockchain project. They're doing a lot of exciting stuff. Okay. So let's go ahead and focus in on the market here. As we can see over the last 24 hours, Bitcoin is up over 4% here. It was ticking up a little bit higher back a few hours beforehand. Overnight, it's dropped a little bit, but it was up around 5 to 6%. Really solid pop coming out of the market. Again, some buying volume coming across exchanges. And again, we can see here, there are not many players outside of, players that we know, like Ren, Factum, Synthetics, a few other players here. I know we got Ravencoin as well, outpacing Bitcoin. But really, right now, not many players are outpacing Bitcoin over the last 24 hours. We got a big pop in dominance for Bitcoin here, really going against, again, our general theory that we're entering into a downtrend here. So again, if we see enough days like this where Bitcoin really starts popping up and altcoins can't keep up, that would be a little bit concerning. But at the moment, our weekly indicators, as I'll showcase on Bitcoin dominance, have not really changed. Now, if we take a look here at overall market capitalization, it's very clear that I think overall as a market, we have set in the bottom here. We talked about the big even of $200 billion, a double of what we had here at our lows down here at $100 billion. So I think this is where the bottom is set in. It's a matter here of questioning whether or not it's proper to be in Bitcoin right now or if it's proper to be in altcoin positions. Again, not going to try to determine that for you guys. I'm just going to show you guys what I'm seeing in the market as we go throughout the review. If we take a look at altcoins here, though, altcoins have made up a good amount of this recovery. They have taken back a lot of the market dominance over the last few weeks, right? So this little bump here that we saw here, right? I mean, it's a pretty big leap here, almost a percentage point in dominance. If you take a look at the actual chart, which we'll take a look at in a moment later on TradingView, it's actually a little bit bigger. But we can see here again, the general trend is still downward, right, guys? So that's the major thing to take into mind here. We need to see a consistent few days where this trend might start to reverse before we actually get, fearful that altcoins aren't going to continue to regain dominance in the market. Again, focus on the longer term aspect here. If we take a look at the all-time chart, right, we had been on an uptrend for a very long time on Bitcoin dominance. So again, I'm more on the theory that we're probably going to see a shift here, but let's go ahead. We'll try to take a look at both sides here. All right. So the first thing I want to do before we take a look at dominance is talk about Bitcoin's price here. So as I already told you all, I'm following, in the sense of Bitcoin investing, I'm keeping it very simple. Anytime I get a 35 to 40% correction, I add, right? And if I get 45% dips as well, I like to add as well. The only time I'm not going to add is if I'm adding into altcoins. In that case, if I feel there's more of a benefit there, and that's what I've been doing as of recent. But anything down in this range here in the sense of Bitcoin, if I was just investing in Bitcoin solely, that's my general strategy for this market, because it's too difficult to try to trade this market. And we know historically from the previous cycle, and so far, around this, well, I would say actually we haven't seen it, to be fair, in this cycle. But in the previous cycle, it was tending to be that on anywhere from 35 to 40% corrections. Sometimes we get a little bit more. Generally speaking, that range, a little bit less than a 50% correction, we can buy into markets, and it usually is that during an uptrend, Bitcoin continues higher, right? And it doesn't go much lower from that point on. So this would be a point where I personally average in. But if you're following my general macro trader strategy, how I would trade most markets in general, we still haven't seen, again, I'm taking a look at the weekly chart here, we haven't seen any of the indicators flashing just yet. The divergence is growing on the MACD. The squeeze momentum is declining, turning to the red side. And outside of that as well, we are seeing the stochastic RSI hunkering down at the bottom, not picking up into the medium channel here, which again would be the sign we look for to turn bullish. So we're going to have to probably see another week of green price action after this week. Now, this was starting on the 7th of October, so this is probably going to be a good 10 days before we really start to see any serious change in these indicators. If I see a shortening divergence in the MACD, if I see the stochastic popping up, might be some early warning signs to where, again, with Bitcoin, I might build an exception because it's a very short and quick market where a weekly time frame doesn't always work, right? But again, I already told you guys, if you're just following that simple strategy that I've talked about on how to simplify Bitcoin investing, this is a golden opportunity in that case because you're looking for those 30 to 40% corrections. Not guaranteeing anything. And again, as some people have theorized that we've now entered into a longer bear market and things of that sort, it might be the case, but I really don't see that happening. I think we've entered into the next cycle. If we really step back and take a look at the macro picture here, right? I'll go ahead and show you guys. Actually, I'm sorry, I've got my drawings turned off. That's why it looks weird. And it's still going to look weird because I don't have it on the logarithmic chart. So, again, my theory here is that, let me go ahead and get it here so you guys can see it much more clear. There we go. Again, that we are entering into some form of cycle here to go into 2021. Again, it might be overly optimistic, but again, this is kind of the theory here. And this line here is just a general representation, right? To signify what I mean in the sense of coming down to the lower band of the channel and then coming back up to some degree, right? And the longer the cycle actually goes, better in this case because it means we can reach more parabolic highs in accordance to the line of resistance here, the channel in this case. And this is a logarithmic chart, so it gets really exponential over time. Anyways, so we've talked about that. I'll talk about Bitcoin dominance real quick, but I really want to dive into this news about the Fed because I think it's the most important. But if we take a look at the daily here, just to showcase what I mean, we did get a nice little pop-up here, really, not only from yesterday, but also we've really continued that today and this morning, where Bitcoin dominance has really continued to gain here, right? So take a look at the hourly. Whereas it was looking like it might start fading down, we actually got a pop-up here. It's generally facing some resistance where support was for a while and what is now serving as resistance. So it'll be interesting to see if we can get much higher here for Bitcoin dominance. But again, I look at the weekly chart, guys. I'm not going to be biased. The weekly chart right now tells me that altcoins right now are still in the play right now, that we have still entered into a shift where altcoins are going to start to gain. And that's why I've been confident on the idea that we are entering into some form of an altcoin cycle. Is it the early stages? Yes. Are we far from the kind of parabolic run-ups across the board that many people expect? Well, I would not only say that, but we're not going to see all altcoins win in the next cycle, right? And that's why I've been looking for a lot of the next Ethereums, the next Litecoins, the next XRPs that really could lead the market in the sense of gaining serious traction on their own. So that's what I think we found with Chainlink, with Ravencoin, with a lot of these plays in the market, as well as Basic Attention Token. But again, it's just what I like, and you have to see if you agree with me on those projects. But again, keeping it simple, guys, this is what I look for here. I'm looking at the weekly chart. I'm on logarithmic, so it's going to be a little distorted. So I'm looking for the weekly chart in this case. My indicators all showcase that Bitcoin dominance is declining, right? Until we see a week where that momentum changes, I have to stick to my guns, right? Especially in these longer term cycles. It's proven that it's much more useful to think in these kind of frameworks when it comes to measuring dominance in the market and picking up market shifts, right? So anyways, let's go ahead and talk about this news about the Fed resuming its balance sheet growth, reversing the trend of reduction. And, it's so funny. Even here on Bloomberg, they kind of drill in Powell's point that it's not quantitative easing. And I'll explain very simply. I'm not going to hold up you guys in the sense of your time. I want to be very clear and blunt about this. So the Fed chairman, Jay Powell, has quoted that this new balance sheet addition, this hundreds of billions of dollars that are now starting to be added to the balance sheet, outside of what they've done in repo markets, bear in mind, is going to be seen, so they're going to continue adding to the balance sheet here. It is not quantitative easing because all they are doing is buying treasuries, right? And he hints that this is not the kind of mass expansion of the balance sheet that we saw back in 2008, the very reactionary, $1 trillion add of treasuries, of mortgage-backed securities, this kind of bundle of those are really the two things that they really had. It was mortgage-backed securities and treasuries. That's really what made up most of it. So now we take that into mind, we're analyzing Powell's comments. He's saying, oh, it's just treasuries and it's not as much as last time. The fact of the matter is that's not what defines quantitative easing. The term quantitative easing, right, defines the central bank buying up a lump sum of certain financial products. It doesn't matter if it's toxic assets like the mortgage-backed securities or treasury notes that, again, provide relief. And I'll explain why. Because when the Fed is buying up treasuries, right, if that's all it's doing, it is still providing relief to equity markets and to housing markets. The reason being is there is a limited number of treasuries. And if the Fed is purchasing those treasuries, if it is stealing the potential assets for people to invest in, then that means liquidity has to flow elsewhere, right? There's still some other treasury notes out there, no doubt about it. But again, if you're talking about reducing the available supply on the market, then people have to go somewhere else. Well, where are they going to go? They're going to invest it in asset prices. Or excuse me, they're going to invest it in assets. So that means they're going to invest it in properties. They're going to invest it in stocks. And bear in mind, if the Fed starts adding treasuries to its balance sheet, what's to stop it from adding other assets eventually, right? They've already kind of gotten away with the support they've provided to repo markets, the hundreds of billions of dollars, and not calling that in any form quantitative easing or, not making a big deal out of that in any sense. What's to stop them from eventually just starting to add a little bit back in the sense of maybe mortgage-backed securities or those toxic assets that still linger out there, right? Buyers have bought them. What happens as well if there's some other toxic financial product that's arrived since 2008 that we don't know about that hits the market? Will we stop the Fed from buying that as well? Will that be defined as quantitative easing? Even if it's just in small fractional amounts, rather than the big shocking buys that we had when we push things off too much, in the sense of worrying about the underlying plumbing of the financial sector. And what's to stop the Fed as well from purchasing equities, right? The Fed knows they have to do this gradually, but they know they have to step in and start buying up treasuries to incentivize equity purchasing, just like they did in 2008. And the reason why is because the capital is drying up. They know, they've looked at the data. The Fed cares about keeping up equity markets because I think in their mind as well, they not only obviously have incentives in this case to do that, because I honestly don't think the Fed really represents everyday people, but for some participants. But at the same time, they know that right now the only thing that has been keeping up equity markets is stock buybacks. It is clear. Look at the net buyers here. This is not some kind of exclusive hidden chart. Institutions have not been adding into equity markets. Households, net negative since 2008, right? They were adding throughout 2013 to 2015. They stopped, right? The only thing that is continuously added into it is either the rest of the world investing into U.S. equities because, quite frankly, it's better performing than their crappy markets, which are still at 0% interest rates. It's mostly the EU in this case, QE money flying over in this case to buying up stocks. But the major thing here is that it's non-financial corporations. So how would non-financial corporations buy stock? Well, they do it through stock buybacks. It's Apple's $100 billion stock buyback program after we'd already had about an 8-year bull market, right? It's ridiculous things like that are artificial in nature and are taking cash which should be invested in the real economy and real job growth and real manufacturing and development here and research in the economy. No, it's all going into an artificial bubble. It's a bubble that's building up that eventually is going to run dry of this capital. And the Fed is starting to pick up on this. It knows this is what's keeping up markets. And they've decided to employ the last tool that they really can extend further, and that is the balance sheet. And we've talked about this on the channel. It's the Fed's last weapon. They're going to buy up treasuries. And when that's not enough to push up markets higher, they're going to pick up toxic assets and other types of asset classes as well. But ultimately, the Fed has made it very clear. They're going to become Japan, just like every other central bank across the world. And I don't know if it's going to happen overnight, but I can tell you over time, we are going to see the Fed and other central banks starting to buy up equities and ETFs. And it's going to get to a point where the market is so artificial, like Japan, where the central bank owns 80%, have 75 to 80% of all existing ETFs, is a major shareholder in all these companies, with money they printed out of thin air. And still, at that moment, you can't stimulate the economy further. It'll be an interesting case scenario. And quite frankly, it might change our perspective that we've hit a top in the market around 3,000 on the S&P 500. We might take a little bit higher, right? As we've historically seen when we have the inversion on the yield curve. I know a lot of people were fearful about that a while back, but it tends to be that we have another 6 months, and sometimes I think it was like a 15 or 20% run up after the inversion of the yield curve. But this would make great sense here if we topped out here at 3,000, because it'd be a direct 50% correction downward towards previous resistance around 1,500. Maybe we'll go up a little bit higher to maybe 30,800. And then actually pull down to the actual level here, which is really around 1540, right? Who knows? Either way, that's not a good risk to reward profile for me. I'm not dabbling with it, but I'm also not betting against equity markets. I'm not buying puts just yet. I'm holding hedges that have been outpacing equities this year. Gold, silver, crypto, right? That's where I'm going to be exposed over the next year or two, because the risk to reward is much favorable. The momentum is dying off. The indicators right here look wonky. They don't show me that we're in a bull market. I look for nice divergences to the upside here for the MACD. I want to see the stochastic popping up good. I want to see momentum growing here. And now, instead of saying higher levels on the momentum, we're setting lower levels, and we keep getting shot down on the monthly. It doesn't look good to me, guys. Got to be fair. But I'd like to know what you all think down below in the comments. Do you think the Fed's got it under control? Or do you think that this is not only, yet again, quantitative easing, but that it's going to inevitably fail and actually stimulating the economy, the real underlying economy, any further? I'd like to know what you guys think down below in the comments. Get a discussion going. But let's go ahead and dive into this review of Tayal. Alrighty, everyone, so let's go ahead and spend some time to take a look at today's sponsor, and it is no other than Tayal. Now, many of you out there may recall as far back as 2017 that we originally talked about Tayal here on the Data Dash channel under its previous name, formerly known as Wabi. And ever since then, the project has gone out on delivering on its original promise to be able to provide a global audience of consumers with a suite of products that come with the reassurance and peace of mind of knowing where that product has come from the point of manufacturing all the way to the point of sale. And this is extremely valuable in a lot of different business use cases across the world, specifically in a lot of geographical regions that have had issues with the transparency of where products come from and what's really inside the products that are being shipped. So we're going to be talking about those use cases first. It's important to understand the problem that Tayal is fixing. But outside of that, we'll talk about the Tayal token, how it serves as a loyalty point system for users, and how it actually benefits token holders. But along with that, we're going to learn how Tayal and its underlying company, TechRock, actually goes about providing a system where you can do this in a transparent way. Okay, we've got a lot of exciting things to talk about, so let's go ahead and dive into it. So first off, let's step back to 2017 when Tayal really got started. And originally, the major concern that Tayal tried to focus on, it still is one of their major business use cases today, is baby formula. So we have to step back even further, back towards 2008. There was a very big crisis in China during 2008, and this was the Chinese milk scandal. Now, in China, which is an economy of billions of individuals, there is a very big need, and that is something known as baby formula. Now, a lot of parents need to provide baby formula during the early stages of a baby's development. And the issue was that in China, there was a very big issue where people, through the supply chain system, actually went through manipulating what was inside the baby formula, diluting it and mixing it with a variety of other chemical compounds. And one of these chemicals that really harmed a lot of Chinese citizens, predominantly young children in this case of families, was melamine. And this was basically mixed into a variety of baby formula, diluting it, but not only diluting it, but causing medical issues for children. We had not only had 300,000 victims in China that were hit by this, but 6 children died because of the event. So this was a huge outbreak in China, a very big issue that the Chinese government was very set out on fixing. This kind of breach in the trust of the supply chain system led a lot of consumers to no longer buying their baby formula on the shelves of Chinese consumer stores. In fact, they went towards other areas and outlets, areas, for example, like Australia, where they got it shipped over. And it's made baby formula get very expensive. So to bring back business into China in this case, in the native homeland of its citizens, and along with that as well, to be able to buy products and services from their own merchants in this case, to have that trust, Tayal is providing that. TechRock is providing this. So I want to go ahead and showcase how it actually works a little bit, right? There's a little bit of a promotional video here that I've got here that I'll leave linked down below that kind of talks about not only the story behind the outbreak, but also some of the technologies they use. The major thing, though, is that TechRock provides the technology through your mobile phone and a use of RFID and NFC tags. So this is a good little kind of illustration of what it looks like. But it's basically a radio antenna that's on top of the product that can showcase not only the geolocation of where it's gone, but along with that as well, whether or not it's been tampered with. So that's the big issue here that we're trying to solve, is to make sure that people cannot dilute these given products. And it's not just baby formula. As you can see, as you take a look at possibly TechRock's product suite, there's a whole wide range of products they're servicing here, from not only food and beverage items, but also counterfeit goods, to make sure that you know you're getting the right actual version of a certain type of good or service, right? So that's the really cool thing here, is to have that trust and transparency. And it takes a simple tap of your mobile phone, which again is very common throughout China and the rest of Asia, where you simply just go through and again, you can tap the NFC to verify, in this case, that your product has gone to a certain set of geolocations, basically the certain types of players within the supply chain system, but also that you can verify, in this case, that it hasn't been tampered with. And by using Tile, this is where we're going to be diving into later about the real business model and the token model, is that when you buy products through TechRock in this case, or many of its partners, you actually get Tile tokens in this case. So it's a loyalty reward program. So you can see here, you can actually see it here in real action. It's going through, it's verifying, it's checking the locations, it's checking the timestamp, confirming in this case that it has been tampered with. So it's a very short video. If you guys want to watch it with the audio, you feel free to check out the link down below. And I even have some videos that are consumer testimonials talking about Tile and being able to earn rewards, but also using TechRock in this case as the underlying infrastructure. So it's important to understand that separation, right? Tile is the token in this case. It's the loyalty reward program that's built into the TechRock ecosystem. So think of TechRock like the merchant in this case, right? It's an actual company. It services a wide global audience, and it's partnering with a lot of different interesting projects out there, as we'll learn throughout the video. All right, so let's go ahead and talk about the business model here, right? So we've already dived in a little bit into this, but I want to go ahead and talk again about the separation here, just to be very clear. So the first thing here is to understand that TechRock itself is a company. This is originally what was known as Walimai. So this was the company that, again, if you can probably tell, Walimai, Wabi originally with the name, that it had was the parent company that actually provides the trackability with the NFC and RFID tags. So it's very important. They're the ones who are basically connecting with these goods and services, providing the tags. And again, Tile in this case as a token is the loyalty reward program. So as we scroll down here, we can start to see how Tile works. So anytime that you actually scan an item, in this case, a good that uses the TechRock technology, the RFID, as well as the NFC tag, you get Tile for it. And there's some really interesting aspects to this token model that we need to take into account that makes it a really functional system, not only for users, in this case as a reward program, but also for holders in the token, okay? So it's important to keep in mind as well, as we go into this token model and understanding Tile, there's two blockchains at play as well. So we first off have Tile in this case, which is basically an ERC20 token in the Ethereum blockchain, but we also have another element here that uses Hyperledger, okay? So Tile in this case is on Ethereum, its ticker is Wabi in this case, and then you also have as well the TechRock aspect, which uses Hyperledger, okay? So let's go ahead and talk about these two, right? So if you're doing any kind of transaction with Tile, if you're receiving Tile tokens, or if you're using them to buy certain goods in this case, basically it's a loyalty cashback reward program to be able to purchase other goods from the TechRock ecosystem, then in that case, you are using the Ethereum network. But the other network as well is for their other loyalty point, which is ShiftGen, okay? Now, I'm probably mispronouncing that, to be completely fair, but to explain how it works, it's basically a one-to-one backed token on Hyperledger that's used for Chinese consumers that has a one-to-one ratio to Wabi in this case. So to explain it, the reason for this, I could assume probably that the Tile team probably didn't want to have to create another a separate blockchain, or use a separate blockchain, have a separate token. But the reason for this is due to Chinese regulations. And the way that it actually works is it gets around all the requirements for capital controls. It's completely compliant in line with that. And it still serves as a loyalty program. Whereas when a Chinese consumer shops for a good inside Chinese markets that uses TechRock's system, and they receive what would equivalently be Tile, but in this case it's ShiftGen points. Once they receive those points, there is a Tile token in the background that gets basically put into the wallet and is locked up and only able to be used for consumer goods within the Tile ecosystem, just like your Tile tokens. And that's the important thing to understand. Let's go ahead and actually spend a little time here. I want to jump here really to talking about demand and supply, and we'll jump back to some of the other aspects. But I think it's very important to understand the token model, right? What makes Tile so good as a loyalty reward program, to where consumers don't have to know about blockchain, but at the same time is a system where actual real user adoption of the token as a loyalty point system actually brings benefit to the price of the underlying token, right? Brings a sense of demand to the token for the overall supply. Well, the cool thing about it is that when you actually receive rewards into your wallet, the cool thing is that you can't actually move those out and sell those on an exchange. You can only use this within the Tile ecosystem. So the more users who are starting to use Tile on this, or basically buy products from TechRock and receive Tile, the more you have a limitation on supply. So again, more users buying goods, receiving rewards, being able to receive the loyalty points in the form of Tile. In this case, you're able to limit the supply and drive up a growing demand, but also a lowering supply in this case, right? So here's a good little chart. If you guys are curious, again, I'm going to leave all this link down below so you guys can do your due diligence, look into it, see if you see what I see in the token model. I think it's actually quite fascinating. And we'll talk again how Tile really does something that I call as what's known as the chain of incentives, where each participant really benefits from being a part of the TechRock and Tile ecosystem, right? Again, this is all about building not so much a supply chain logistics solution. I really want to drive this point home. It's not so much about a supply chain logistics solution, right? The NFC, RFID, that's kind of been around for a little while. The major thing that Tile is doing is providing an ecosystem of products, that we know we can trust from point of sale all the way to the previous point of manufacturing in this case, throughout the entire supply chain system. It's all about having a trustworthy set of products and services. So they talk here about, again, reducing the circulating supply. So Tile held in consumer wallets are only for future use. Tile lost through user inactivity. Maybe people decide not to use Tile anymore in this case. Maybe it was a one-time purchase through TechRock. And then also Tile held due to value gamification. So in this case, if people in this case want to see the value go up over time, in that case, they might hold their Tile tokens. So the major thing here is that consumers have to use it in this case. I think that's going to be really one of the game changers here. You're basically having to use it within your wallet. Now, there's another few things to take into mind here as well. Understanding the background of how the token system works. I'm going to go ahead and just kind of take a look at this photo here, and I'll zoom in a little bit. So there's an important thing to understand about how merchants actually can drive up the value of Tile as well. So let's go through the stepping process here, right? So a consumer in this case is using the TechRock app, and they're actually going through purchasing a product or service that's using the proprietary tech from TechRock, in this case the NFC RFID tags. They've bought the product. Let's say they bought, for example, $100 worth of goods. The consumer gets $10 worth of Tile back for that purchase. Now, to give $10 worth of Tiles to consumers, Brand A, the company who's selling this product, has to buy Tiles from the open market or exchange, okay? So again, I'm assuming that in this case, TechRock and the Tile team overall has provided streamlined ways of doing this where they don't have to know about crypto. It's not complex, but they have to go through and purchase $10 of the Tile tokens, which brings a net benefit to the overall demand for the token supply. It's not just the team or Tile as a project giving out the tokens. The team has to actually buy those tokens off the market. The consumer can redeem these Tiles with their next purchase, or of Brand B, for example. It's another company. So if the price of the products is $100 in this case, then they're basically going to have to only pay $90, and they use their $10 worth of Tile tokens. And then after that as well, company B in this case, or brand merchant B, will receive the $90 and $10 worth of Tile. They can hold it, they can sell the Tile. So basically, it's a neutral effect in some cases if, again, the merchant decides on the other end to sell it. In some cases, they might decide to hold it in this case, or maybe, for example, they know that there's a lot of consumers coming in and, buying these products from TechRock. So maybe they might want to hold onto those Tile tokens to pay out those loyalty reward programs as the value goes up. And that's the whole kind of psychology here, is whether or not companies want to do that. And they have the complete freedom to choose what they want to do in that regard. So again, it's a very good ebb and flow kind of system that, again, doesn't depend on too much complexity. So it's just a decision of whether or not merchant A and merchant B in this case wants to, merchant B in this case really is the one that has the choice to keep it or again to just instantly sell it back in the market. So I'm assuming again that Tile and basically overall TechRock has the ability to make this streamlined for merchants. Now, outside of that as well, Rakuten as well. I'm probably mispronouncing. There's a company here in the U.S. that's very similar, but the company we're talking about here, Rakuten, it basically is a company in Japan. It's the largest e-commerce play. Has recently partnered with Tile. And the important thing to take away from this is that not only is this the largest Japanese e-commerce company, which is big enough as is, but along with that they don't really tend to partner with a lot of companies, at least to the degree that they have with Tile. And they've actually gone through and created a framework where they're now selling a lot of different types of products that you originally find in the TechRock ecosystem that utilize the NFC and RFID tags and will provide, in this case, rewards for those who actually scan the products just like they would from if they bought it from TechRock. So this really broadens out the product suite that's available for Tile and TechRock in this case for consumers. And you can see here that this Japanese e-commerce company doesn't partner with a lot of players. You have companies, for example, these are the only really other two major companies here. Koala, I think it's pronounced Koala in this case. It's misspelled a little bit like most startups nowadays. But Koala as well as JD.com. And I know JD.com is one of the major top 3 to 5 e-commerce plays in China. It's a huge company. It's a massive company. And because you see this kind of suite of partnerships here working with this e-commerce giant, it shows you that they have pretty high standards in this case. So again, they basically are bringing out 30 high-demand products from the original Tile ecosystem in this case, where you can receive those rewards, and again, are utilizing that technology for the transparency. So again, you guys can take a look at Rakuten, and it's, again, very large Japanese e-commerce giant, not to mention as well, Koala got picked up by Alibaba back a few months ago for a whopping $2 billion. Pretty crazy stuff. So, again, really interesting stuff here. Again, I love the flow here of how merchants interact within this ecosystem. And again, the same rule applies here for those other merchants we just talked about, those partners in this case. For Rakuten in this case, basically, they have to buy up a certain amount of tokens every time a product is sold on the platform. The reason for this and why consumers would want to do this is we have to understand that all of the players benefit. And I think this is an important time to go back, take a little bit of a look at the ecosystem, okay? So the ecosystem for Tile really benefits all individuals. And again, I call this the chain of incentives. There needs to be a role that each of these participants play in to build demand and then also provide incentive and reward for different individuals who you're trying, again, to bring into the ecosystem. So for example, we have the consumer, the exchange, we have TechRock as a company, and then also brand of merchants, right? So there's a few things here, right? For the merchant, in this case, it's bringing extra business. If you can provide a product or service that not only gives some loyalty program to consumers, but outside of that provides transparency and trust in your products, then in that case, it brings more business to mainland businesses in China, right? Outside of that as well, the consumer receives a benefit in this case. They're receiving a direct set of points in this case, or Tile, for their shopping habits that they can utilize to buy other products or services within the ecosystem. So again, these are really the two major components, the positive feedback loop. But along with that as well, you can go ahead and actually trade on exchanges. In this case, if you wanted to sell your Tile as an investor in this case on the outside, again, if you wanted to support the ecosystem, if you believe in Tile, you can actually, again, be able to purchase the token and trade it. But outside of that as well, on TechRock as well, TechRock as a company is being able to sell products and services. They're able to provide a real market solution to consumers, and they're also as well able to collect data, in this case, from brands and merchants. So again, there's this whole ebb and flow here between all the participants, and that's not something you find in a lot of tokens, right? So again, just wanted to reemphasize that. So to start off at taking a look at the team, I want to begin by taking a look at Alexander Busarov, who is not only one of the co-founders of both Tile as well as TechRock, but along with that is a really interesting individual that I got to meet when I went to my first conference in February of 2018 in Singapore. And it was really great because at the time I already knew about Tile, I already knew about Alexander, but it was really cool to get to talk to him firsthand. And the two things that I really took away from our conversations was that A, they were really focused on the real market use cases. They weren't about, overinflating their market size and focusing on too many avenues. They really focused on baby formula and a few other types of tests for food and beverages. And outside of that as well, what I really liked is that when I talked to Alexander, I had some questions still about Tayel as well as the technology that TechRock used. And every time I had a question, he had a great response to it. It just felt very genuine in this case. That's a good sign of an entrepreneur when you can actually answer questions like that about your product, any kind of concerns that consumers might have. So I got to give hats off to Alexander and the rest of the team. And one thing that I do want to note here, even though we won't be able to dive fully into the team today, is that across the board, you see a very similar trend here amongst the founders of the company, as well as the kind of leaders and in charge of both not only Tayel, but also TechRock. And that is that a lot of them share a few commonalities. So the first one here is that they've worked at a variety of companies, but most of them have worked in a background of consulting. So we can see here, for example, with Alexander, he's worked at McKinsey & Company, which is a company that does over $10 billion, a major consulting firm across the world. But along with that, has an extensive educational background going to the London School of Economics, and also has a background in studying Mandarin. So there's a very big important factor to this. Not only do they have great credentials behind them, as well as, obviously showcase in the past an experience in consulting, but outside of that, probably the most important thing is that many of the team members in this case understand and speak Mandarin. And the reason why I think that's important is that if you really want to make your business predominant in China, just like you would in America or any other country across the world, you need to understand the language, the culture, and the business practices of those areas. I think it's extremely important. If I tried to go and build a business in China, the problem I'm going to suffer from is that I don't know what a day-to-day life is for a Chinese consumer. I don't know how to communicate and interact, to take easy feedback. And I think that's really awesome how most of the team, again, not only understands their market, but they're really trying to build a product focused for that market. You find that as well in the other co-founder, Yaroslav Belinsky, which again is a co-founder of both projects, has worked in a previous consulting company, Bain & Company, another large consulting firm, but also studied at the University of Oxford as LSE, and then also, again, studied Mandarin. You also see as well Edward Sang in this case. And Edward Sang in this case has focused on a lot of emerging technologies, which again helps in this case when you're working with new things like RFID technology, NFC, IoT, blockchain, all kinds of interesting emerging sectors. And last but not least as well, we also have Bettina L, who is another individual on the team who runs the head of operations at TechRock. And she's gone through not only founded a variety of startups herself, from CrossFit companies, as well as what appears from what I can see as a cuisine company in this case, providing maybe like sweets or baked goods and stuff like that to consumers. But she's also worked at Deloitte, again, as a consultant. And then also outside of that as well, has gone to UC Berkeley College of Engineering. So, I mean, you can obviously see, guys, the team is stacked very well. A lot of practical individuals from a variety of different backgrounds, sharing those similarities, though, that put them in a good position to work together as leaders of the company. So let's go ahead and recap. The major takeaway that I have from updating my research and my time looking into Tayel and TechRock is that they've gone a long way over the last few years in growing. And the key takeaway is that they're not a white paper. They're not some proof of concept. This is a real company in a real token loyalty program that's seeing real world adoption. In fact, they're actually transparent about these numbers. If you scroll down on the website, you can see on a month-by-month basis how their user base is growing. And it's really exciting to see that. I have to say, because I think this is fixing a very big issue. It's something that I'm morally passionate about, being able to trust and verify where your products or services come from. I can't believe, living in a world where I wouldn't be able to comfortably go to the grocery store and buy something that I know I can trust. Not to mention, I love reward programs. It's a very kind of American idea in this case, I think, to receive some form of reward programs for when you spend money, especially through a specific type of retailer in this case, right? So again, it's building this ecosystem, giving consumers better rewards, better benefits, and then also better trust. There's really no loss for consumers here, which I think is extremely exciting to have this interesting token utility model that actually functions quite well and has a great chain of incentives amongst all participants. Now, to be fair here, I still think it's very early on. I would still see, in this case, TechRock as a startup. And I don't think Alexander and the team would probably disagree with that. That's my one thing here, is that they're still very early on, to take into mind that, a good more than half of this is token holders. So we're really working with a few thousand users in this case. But as you can see, they're continuing to grow. And I think the more and more they prove through some of these big e-commerce merchants that they've partnered with, that they have a real product that is valuable to consumers, it's going to take off like a a rocket. And I really wish the team all the best over the next few months and years in achieving that goal of trying to provide a global audience with the trust and transparency that they deserve for products. So anyways, that's it for the review, everyone. If you guys have any comments, feel free to leave it down below in the comment section of the video, and let me know what you think. Do you guys think that TidyL could be a really solid reward program for consumers that would get them using products like this, getting more trust and transparency on their goods and services? Or do you feel that there's still some room to grow and some changes that they should make? Provide any feedback down below. Leave it in the comments as I mentioned before. But until the next video, everyone, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.